What's up, YouTube? So in this video, I want to knock down some of the 930 opening range points, and a lot of my students should be around this 930 open. Like, that's what I'm teaching. And if you guys are just trading around the 930 open, whether it's ICT or not, then these concepts should still work and help you guys out. So looking at this chart, it's just very blank, you know, like it doesn't look like there's much framework around it. So the first things I always teach people is always mark out your opening midnight and then your 930. Like, that's just the first thing you want to do. So looking at price, I have a preset already. So midnight is here, and what this helps you see is the previous day to the current day. Like, that's what that's for. And then from midnight to 9 or 930, I say 9, but 930 is another one too. So midnight to 9, what this is showing you is where are the pools, and this helps you pick a bias for the opening range. You have liquidity pool here, and you have a liquidity pool here. The highest fair value gap right there, there's another low, so that's a pool. And one trick I can give once you do this step is look for a opposing liquidity. So if you have a pool down here and a pool down here, look for something against that direction that's liquidity, and usually it would be like a high like this or a previous day fair value gap. Identifying that high right here, you can use the 930 manipulation to that high. So that's a model within itself. You can trade before 930 and catch the manipulation leg if you can spot the drawn liquidity. Now that's a little bit hard because usually between 930 to 1030 there's a high of the day if the day's bearish, which means if you have a pool down here and a pool here, you're expecting bearish price. So you want 930 to 10 o'clock to put in a high, or 930 to 1030. That's how you want to view price. So the first model when it comes to the 930 is you can trade from 930 open to the opposing direction. And that takes a lot more skill because you have to know where the manipulation is going to go. That's why I say if you have more experience, come at 9 o'clock because you can trade the 930. But if you don't, come to your chart at 930 and let the manipulation get out of the way. So once that manipulation takes place here, you're already expecting a significant high to be put in. You're already expecting it because of the time. 9 to 1030 is here. And I'm going to cut price back here. And I'm going to show you, how do you know that price actually wants to turn around and go lower? Like, how do you know that? How do you know price wants to actually get these pools and it's in your time of the day? So the first thing I tell people is like a minute after 930, you can just hit your regular trading hours. And if you can see price gaps higher with everything else in line, you see a gap higher, now you have a gap on your side. So you have this fair value gap. Well, not a fair value gap, but a real gap here. So now this is telling you price might want to fill this gap. So going back to electronic trading, you can see the gap is from 414 here to 930's open here. So this is the gap difference there. So if price wants to fill that gap, it should do it within that opening range time I gave you guys. So now we know we have a gap on our side. So from the 15, we can drop down to the 5. Looking at this 5 minute here, you can see it's starting to set up like a market maker sell model at a key time of the day. Now you can see price shifting down, breaking structure here, headed towards a liquidity pool here. eventually taking your sell side. And that's how you blend everything. So how to use the opening range gap, how do you use time, how do you use a breaker? Like this is a breaker. And the reason why this is a breaker is because everything had just lined out. So it's like, how to use a fair value gap. Like, see? Because we need to get these pools. So if you guys want a high probability trade, you have to have time on your side with a model. And this is a model in itself.